So my name's Matthew Elliott. I'm an associate professor in the Ness School of Management and Economics at South Dakota State University. Uh, it- this is the Ag Dialogues, or this is a monthly dialogues that we do for just to talk about general topics related to agriculture, but also current events and different aspects that we usually have somebody from SDSU speak about different topics. And so Heather usually runs these meetings, but she was doing another meeting today. So I'm kind of being the MC, plus I'm going to present some of the things that we're working on just to kind of let you guys know what we're doing, and then touch on a little bit of some of the market happenings in the grain markets right now, and potentially some opportunities to price old crop and new crop going forward. So first, I think you guys can see my screen. Can you see this little PowerPoint presentation? Am I sharing that okay? Matt, if you guys want to unmute yourself or put in the chat.
I don't see it.
Oh, you don't? Okay. Let me try this again. Oh, how about now?
Yep, that looks good.
Okay, thank you. So a little bit, I just want to talk about some of the grain market data applications that we've created to try to gather grain market data in real time, and then create visualizations to be able to analyze and interpret that market data, and then turn that into some kind of decision making. Now, this is a work in progress, so we've been trying to, do different things to get all this data into the hands of producers and figure out how to design these apps. And so one thing I guess I'm hoping that, this is by no means a finished product. I just want to show you some things that we're doing and some data we're grabbing. And then if you guys have feedback or thoughts, I'd certainly like you to email myself or Lisa Elliott, who's helped me a lot on trying to figure out how to design and what data to include and how to think about this. So, this is a dialogues, and we'd like to have feedback on, what kind of tools and data that you producers would like to look at in order to help with make better marketing decisions. And so that's kind of the overview. And so I'm going to discuss some of the interactive grain reports that I've been working on, looking for guidance, as I mentioned, from producers and stakeholders out there. So, my email, you can get on the SDSU website, but I'll share my email too if you want to contact me like that, or you can give me a phone call. Essentially, there's a lot of grain market data out there. There's more and more all the time. And so, that's one thing, is building all the software and web applications that gather the data in real time, and then put it into some kind of format that you can interpret it and turn it into a decision. That's the complicated nature of it. But so that's what we're trying to do, is trying to bridge that gap, is to gather that in real time and make it useful. So that's one of the things. So I'll cover some of the interactive grain reports that we've been working on. These are the links. So you can go to the links and you can look at them, because there's a lot of data. They're interactive, so you can kind of study them. I'm not going to be able to cover all the things in them at this point in time, but basically, if you go to these links, they're all agland.sdstate.edu as the root. And then for the corn report, it's just the / and then corn, and then soybeans and HRS. And so right now it takes about 10-15 seconds to load all the graphics. So I'm working on trying to get the speed up on that, make it quicker to upload, but and then maybe figuring out how to put them all in one website or one web page, so that you don't have to go multiple different sites. But that's kind of some of the future work. We also have some applications out there that allow a little bit more interactivity. Looking at net income, and you can adjust your costs, and I'll kind of cover those. And so those are under the net income. And then we have some basis tools specific to South Dakota. That's under the agland.sdstate.edu basis and basis 2. And I'll try to touch on those a little bit so you kind of are familiar with some of the things out there, and maybe just how to operate them and how to understand them. So I'm going to turn over the grain reports first that we've been working on. And let me see. So I'm going to share this screen, get this off, get this out of here. Okay. Can you see my website that I'm?
Yes.
Okay, great. So this is the start of the corn report. And I'm going to talk a little bit about where all the data comes from. I haven't had the opportunity to put all the captions with sourcing and everything like that, but I'm just kind of giving you an overview. So as we get these finished, you'll kind of be familiar with what's going on here, so it's not so overwhelming. But so this first map is basically just looking at some of the recent cash bids for corn in these different areas, the current rail rates to get to typically your export markets, and also the barge rates. And so if you just hover over these points or the data points here, you can kind of see more information regarding what this information is. And this is all coming from the USDA Ag Market Service. They have a grain transport division, and so they put out all this data, and it's they do it weekly, and so they have their data kind of dispersed, but they do have a printed out report that you can read. But here we're trying to just grab it, put it into something that might be useful for maybe understanding basis changes, or just understanding really how grains moves, and the differences between bid ports and transportation costs and what you're seeing at the local elevator. And so just for example, this is on the red line, this is the rail cost for a shuttle train from Minneapolis to Tacoma, Washington. So the tariff plus the fuel charge is $1.31 a corn bushel. And then the last update for this report was January 15th, 2021. And so these green spots, these are USDA AMS puts out a weekly cash bid report for corn. And so I've added the basis, what that would mean, the cash bid, and then the basis with the futures market on that same day for the spot futures, and in these different locations. So for South Dakota, for example, and I'm not exactly sure how USDA AMS weights all the cash bid prices. We do our own too, but I'm just using the USDA AMS ones here. And so they have 457 a bushel for corn on January 8th in South Dakota, which would be about a basis of minus 39 cents. And so you can kind of see these different things. Now the blue lines, these are barge costs, maybe not as important directly for South Dakota, but it does influence basis in Iowa and Illinois, and that can have an effect on our basis as well. So if you hover down, and also there's a table of contents. So if you just want to, you can click on these things, and you can go down to the next chart. And what we have here is just going through all the data that since 2007, or all the data that's available through USDA AMS, and kind of just putting a historical understanding of this data and lined up So on the here in the red lines, you have all your rail costs in their corn, transportation costs, and how those have changed over the years. So corn transportation costs were a lot higher back in that 2012 to 2015 period, but then they've kind of been more steady and pretty even since then. Um, Barge rates, are typically pretty heavy, are pretty much a lot higher for barge rates during that, that peak time when right after harvest, when they're trying to do a lot of shipment of barges with grain on them, especially before the rivers freeze up and things like that. So you can kind of see the fluctuation in how the barge rates are changing. And as those barge rates change, that will have an influence on basis um, between, especially the Gulf and in the interior. So that's something to kind of pay attention to. And then on the final one, these are those AMS basis reports between the different markets. And so I have it right now, I have it on compare, and so you can see all the lines at once. Um, and then you can kind of up and down. If you don't want to see the compare, you can take that and you just want to see what a single line is. It's right up here. So it says compare data on hover or just show the closest data point. And so if you push that one instead, then you just get one. And so maybe that's a little bit easier to see, or to understand at first. But so what we're looking at here is, the Gulf Louisiana corn bid on December 31st. Basis was about 80 cents. And then if you look up here, a barge rate, a lot of these areas was about 60 cents. So, 80 cents minus the 60 cents plus a little bit more, kind of explains, that basis differential between the port, what the port's bidding, what you see in the interior in some of these areas where there's barge. So it should line up pretty closely to something that you could utilize and see, trying to understand those transportation cost effects on basis. You also can, if there's too many lines, you can turn these lines off by just selecting them in the legend. And so that makes, if you want to focus on a certain thing over another, then that makes it a lot easier. Now, this information is also from the USDA Grain Transportation Division. They basically are tracking from, actually, this is from the Army Corps of Engineers. They're tracking how much corn or wheat or soybeans is going through a certain lock. And so we have these different locks. So if it's going through the Ohio Olmsted lock, then that means a lot of the grains coming from that Ohio, maybe Indiana area down that Ohio River. If it's from and it goes through the Mississippi locks, it's that upper Mississippi. So, Minnesota, Iowa, Illinois, those places. And then the Arkansas lock generally doesn't have a whole lot. But again, you can switch these off. So if you just want to look at how much grain has traveled through the Mississippi locks, you can do that. And then this is the weekly amount of corn that's basically gone through that lock on a weekly basis, but this is the cumulative amount. So if you're trying to figure out, especially if you're trying to figure out what's going on or how much grain could be potentially left in our area and, trying to figure out those local supply and demand factors and how that might influence basis in the future, this can be valuable information for figuring out, well, we know so much grain has gone through down the river already, so we kind of can subtract that from our previous, stocks report in a certain area or something like that, and we can try to understand what's left. Also, the Surface Transportation Board puts out how much grain has shipped on a weekly basis on rails. And so in the red, here's our weekly rail, but this is grain. So they don't tell you if it's corn or soybeans or wheat. They just let you know it's grain. And so you can see how much grain has shipped over the years. So it's been pretty steady, standard type of grain shipments. So if you want to look at, say, just isolate South Dakota, for instance, you can turn all these off and then just hit, you can just hit South Dakota if I can get my, so here just looking at South Dakota and the amount of grain over rail. And again, if you hover over this, I've converted it to how many total cars have been loaded in this marketing year on a cumulative basis, this one, and this is weekly. And so, for example, in South Dakota, on the last report we've had is January 13th. We've loaded 40,563 cars since September 1st for the marketing year. So if you figure about 3,500 bushels for each car, that amounts about 141 million bushels of grain that's been shipped out, or at least loaded on rail cars in South Dakota alone. So that kind of gives you an idea of how much grain might be still in the area if you deduct that from our stocks levels and things like that. So which leads into the next data aspect. And these are these quarterly stocks and disappearance numbers that the USDA NAS puts out and the market really pays attention to. And so we just had a recent stocks report that was pretty bullish for corn, for example, and it was based on December 1st and right after the harvest. And so we can see that actually our grain stocks of 11 billion bushels of corn on December 1st is a little bit lower than what we've been seeing for grain stocks and corn in the most recent years. And so that's one of the aspects of why, after the market saw those numbers, that it was bullish and we saw some price increase. And so this is a year over year change. It wasn't much of a change from year over year since last year, but we're planning on using a lot more corn, and so that was one of the big things that it was bullish. And if you come down here to actual disappearance, so when you figure in production plus what we were carrying over, and then you minus out, what was there, and then that gives you an idea of what was the quarterly demand for corn that year. It just disappeared. It went somewhere. It went to in the processing of ethanol. It went out by exports, or other demand sectors. And so we actually used about 4.7 or 4.8 billion, if you're rounding up, bushels of corn in that last quarter between September 1 and December 1. And that's a quite a bit more higher demand than we've seen in previous years. And again, that gets to the point of, that was a little bit surprising to the market that we had so much quarterly demand in that fourth quarter and our stocks weren't higher than what they were according to that last quarterly stocks report. This is the same thing by state. So you can, again, just break it down. If you just want to focus on South Dakota, you just turn these little things off. I don't know why it jumps to. And so we can do the same kind of see how much disappeared of corn in South Dakota. Somewhere around 260 million bushels of corn disappeared in that last quarter in South Dakota. We roughly produced about 700 million bushels of corn. So that was a pretty hefty demand even for South Dakota, but we've had higher disappearances before in some previous years. If you guys have any questions or anything like that, if you want to chime in, go ahead. I really want to encourage the dialogues. And if you have questions on some of this stuff, I'm more than willing just to kind of have a conversation about it. I think it'll help me as well. And as we continue to design these things. Another thing here is that, so these are your typical U.S. corn and supply and demand estimates that are put out on a monthly basis from WASDE. So we're gathering those immediately when they release them, at 11 o'clock on that whatever day, usually around the 10th or the 12th of the month. And so here we're just looking at corn use estimates. And so, one of the things that's kind of been bullish for corn this year in USDA's estimates is that exports are expected to be a lot more than they have in previous years. In fact, they're projecting somewhere about 2.5 billion bushels of exports. Now, if we look at just ethanol is actually a little bit higher than last year, but less than some previous years, and that's related to the economy and still dealing with the pandemic, not nearly as much gasoline usage, and so that's somewhat been detrimental to the market. But most importantly, the bullish thing about corn and why we've seen such a price increase is that we're back down to about 10.6% stocks, ending stocks to use. And so we're getting, we haven't been that low since, the 2013, 2014 marketing year at the end. And so that's really been bullish to the market. Now, this one shows you the changes for this current marketing year of those supply and demand estimates put out by WASDE, but it tracks the changes throughout the year just to kind of understand why the markets, really changed their expectations on price as we went through this marketing year. So in May, we were expecting all this, production, exports weren't really that high in May as they are now. And so we were showing a lot more higher expected ending stocks to use back there in May, about 22%. But as you can see, between production numbers falling, export numbers going up over the course of the marketing year, and USDA's estimates, our ending stocks have dropped. And we, from what our expectations were at the beginning of this May, so that's really changed the whole grain dynamic, the fundamental information, and that's largely what's underlying the price increases we've experienced since August. Most of the change has been on the production side. So these are looking at supply over those different marketing years. So we can see, the big thing is that we had yields of below trend yields now for the last 2 years. So 167 with last year with all that prevent plant. So that kept a lot of concern about growing stocks down last year. And then this year again, after this last report, they dropped that yield number down to 172 again. And so we're below trend yield again. And so that's really helped lower these production numbers for corn. And then this is during the marketing year. So you can see in May, we were initially expecting, around 16 billion bushel corn crop. Now we're only looking at a 14.1 billion bushel corn crop because of those yield declines and acre declines throughout the year. And so chopping 2 billion bushels of corn production off our estimates really made things a lot more bullish. And if we turn to what's going on in the world, so this is also from the USDA World Demand Reports. Some of the things going on in the world that's actually bullish is that Ukraine production is down a little bit. And one of the things that USDA is expecting is that we will pick up some of that Ukraine export business. So we have your major producers in the world right here. And then we have the major exports. And you can isolate these and look at these, but you can see our exports are picking up, and it's mostly picking up the slack from Ukraine production that's been down. And that's kind of where we're seeing that change in exports, especially. And then if we look at the major corn consumers in the world and changes over the different years, one thing that's probably jumps out the most is when we look at imports and we look at what's happening with China. China has been importing or expected to import a lot more corn than they have in previous years. And so um, that's what's been one of the other things about uh, that's bullish to the market going forward. So you can see these are previous years Chinese imports of corn, and we have this major jump, and USDA is constantly increasing their numbers quite a bit. And here in October they were only expecting 7 million metric tons for Chinese corn imports. Now they're expecting 17.5 million in the last report that they had. And so that's what's caused a lot of changes in the fundamentals of the corn market. And then if you look at ending stocks to use and on January, what our projected ending stocks to use in this chart, and then you think about where futures prices have traded at these different stocks to use levels. So on the x-axis, we have stocks to use as a percent. And then on this y-axis, we have the January futures average monthly futures price. And so we're about right where we would expect, giving a 10.6% projected stocks to use in January for 2021. We're trading about 508 monthly average futures price on the spot futures right here. And that lines up pretty much with where we would think it would be, because this curve kind of is our estimate of where given stocks to use and where we would be trading would be. Now, if we go down to, if our stocks to use continues to drop to below 8%, then we can start thinking about those above $6 prices. But if we increase stocks to use over the remaining course of the year, we can start dropping back down towards that $4 mark on the futures market. But one thing to note is that the drastic change from last January 2020, when we had 13.4% stocks to use, and we were January average spot futures price was 386. So really a change in the markets in the last year, and largely driven by stocks to use and expected export demand. Now, the export commitments. So we have the broke down historically by how much exports that we're expecting to the major countries here in these charts. But we also look at the outstanding sales that we still need to ship to them on our latest market report. How much has actually exported, or the accumulated exports so far on the last report. And then we look at the total commitment. So if corn for total commitment, again, USDA is expecting somewhere about around 2.5 billion bushels in exports. We actually have about 1.8 billion bushels on the books for total commitments right now. And that's quite a bit higher than what we've seen in previous years at this, especially given the time period. So these are all about the same time period that we're looking at here in the marketing year, and seeing what those commitments in the current marketing year are. And again, one of the big players here is China. Hasn't been importing corn from the US, or really too much of corn from anybody, but they've really jumped up in their, not only in their accumulated exports that's already gone out already. So 225 million bushels of corn have already gone to China, but they're pretty high in the commitment. So they have another 200 million some bushels that we plan to still ship to them. And that's kind of indicated here. What's left to ship, the outstanding sales, is about 238 million bushels. And these charts kind of give you an idea of like where we are this year relative to other years at the same time point. So our accumulated exports, interestingly, are about where, an average of where we would normally be on a typical year. But we're really expecting a lot higher corn exports this year. And so this number's gotta start increasing and be high above these lines over the next weeks. And the way it's going to have to do that is we're going to have to reduce these outstanding sales quite a bit. We just have a lot on the books, a lot more on the books, but we just haven't shipped it yet. So I think there's concern, somewhat a bearish concern in the market that we're not going to ship all that's on the books, and the exports are going to be a lot fewer than what, maybe USDA is estimating now, and that'll leave some leftover for ending stocks, and we won't be nearly as tight. So this is something to watch on a weekly basis, is if we can get these outstanding sales accumulated, we can get this accumulated chart up above all these other previous years so we can meet that 2+ billion bushel export target that USDA has projected. And so again, just total commitment, we're above other years. So this number needs to catch up and be above these other numbers if we're going to have that really high export year for corn. Now, these maps just kind of give you an idea of trade flows, port of origins. So we have all the numbers in here for the interior, how much of corn shipped to the interior. Most of that goes to Mexico over rail, but then how much is shipped to the Gulf and where it goes, how much is shipped of corn out of PNW. And this is so far for this current marketing year, but we have maps of other previous years as well, so you can kind of see any different types of changes in trade flows that have occurred, especially when we were looking at this very closely, given the trade wars and tariffs that China had imposed. And so this is something to watch. Now, these are all the figures I have on here on this grain report. Now I plan to continue to work on this. I have some other data I'm going to continue to include, but this is on there, what's on there so far. Again, all these charts are interactive, so you can actually see the data and better explanation for what it means. This says soybean bushels, that's an error. This is corn. So I still got some things I need to fix. If you don't understand something, or you think there's an error in some of the data, don't hesitate to email me, because there's probably quite a few of those that I need to work through, and I haven't caught them all. But so that's the corn report. But we have these for soybeans, and I have it for spring wheat, and then I'm going to have it for winter wheat here real quickly, and I'll get it up on the server. So pretty much kind of the same thing. Here's your cash bid prices for soybeans in your map with your rail costs and barge rates based on a soybean bushel. And we're looking at those basis differentials between the interior markets, those barge bids, rail bids, and then what the export bid is, seeing what kind of margin, if there's narrowing or not. If they're narrowing between the export markets and the interior markets, that generally suggests that demand's real tight in the interior, or supply is real tight in the interior. The demand in the interior is really strong. I mean, maybe more so strong than the export markets. So you can kind of get a indication of what's driving. Is it the demand, and what's driving basis? Is it interior demand at crush facilities, or is it the export markets that's driving it? Again, so we have barge traffic for soybeans by the different locks. Again, on soybeans, you get more soybeans through up that Arkansas River. There's more soybeans that go by barge down the Arkansas River. And then you can kind of study that and see how those changes throughout the year. One thing that to note, I mean, you can kind of start seeing if there's some overestimation in production, if you don't see the barge traffic in the fall keeping up with where maybe you would think it would if we had a big crop. So there's ways you can kind of start getting some indications that maybe the yield estimates are going to come down because the production just wasn't there, because the barges just don't seem to be flowing through like they typically would on that size of a crop. But there could be other factors, and so that's it's not completely, it can't be the case always, but it's just something to wonder or look at for an indication. So soybean demand, this disappearance, again, disappearance was really heavy in this last quarter for soybeans. We 1.7 billion bushels of soybeans disappeared in this between September 1 and December 1. So that was, kind of bullish, but that was kind of more expected than maybe the corn number. And because our export for soybeans has really been strong this fall, it typically is. We do a lot of exporting when Brazil and South America are basically off the export market. We tend to fill the void in that period in the fall. So that's why we see so much disappearance. Soybean exports, if you isolate this, I think we've been higher than we have been in recent years. And those export numbers, USDA changed. It kept increasing a little bit throughout the year. One thing to note is that, especially as our ending stocks, at the beginning of the year, we were expecting 9.4% ending stocks to use on soybeans, or about 405 million bushels in May. Now we're only expected to have 140 million bushels, or a 3.1% stocks to use level. And so that's really what's changed soybean prices from that $9 level to now, the $13 level. And then I got another chart to show that. So where did, production was a little bit off compared to, say, 2018, 2019, but it wasn't that far off. Mostly just demand. We picked up that export demand from in the United States. There's some concern on South American production also, and so that's kind of, the market's really paying attention to the weather in South America. It's been kind of dry in places in Argentina and places in Brazil, and some of those production numbers have come down. And so this is something to watch. I just saw a report out of a private firm that's saying Brazil's soybean productions, they estimate down to 132 million metric tons. That's only 1 million metric tons less than the USDA projected here in the last report. But if those numbers continue to fall, then that's something that's going to be bullish to U.S. soybeans, because that means whatever they can get out of the U.S., they're going to have to come find a little bit more if the demand for soybeans throughout the world stays where it's at. So exports, I think in United States maybe picked up a little bit of a share compared to what we had last year, 35.9% compared to the 35% share of the world market. And so that's, we've been have a little bit healthier export program this marketing year so far, and we're expected to. And so that's been one of the things that's most important. Now, this is the ending stocks for the major producers. You can see over those different reports, our ending stocks have declined quite a bit. USDA still has China with a lot of soybeans on ending stocks level, but really uncertain to what, the condition of those stock levels. And then the government kind of controls those and does those auctions. And if they feel like they need to preserve more to maintain prices and only let out a certain amount from the government warehouses, then it really won't help with, soybean demand in China. So then they continue to look for imports from other countries. So soybean consumption is expected to be up, especially in China, as they rebuild those herd levels. So we're expecting soybean consumption 117 million metric tons. Um, and so that's one of those things that's different than maybe last year. So if we come down here to the stocks to use level again, so the stocks to use level as a percentage basis is on the x-axis, and then our July future or our January futures spot price, monthly average spot price is on the y-axis. So in 2021, we haven't had a stocks to use this low, 3.1% stocks to use level. It's even lower than those really tight years in 2011 and 2013 at this point in time. And so it's not surprising we're fundamentally supported here at that $13.79 approximately. I know the market's down a little bit today, so these numbers don't reflect that. But you can see from a fundamental standpoint, given where our stocks to use levels are, it's supported. It's about where we would expect it to be for the price right now currently. And again, the change from last year is just enormous. We were at the very other end of the spectrum where we had 11.9% stocks to use and we were trading at 9.17 in January. So a complete reversal in fortunes in the market for producers. And so that's been very, very interesting to see evolve this year. So these are the accumulated exports by country again. So these are exports that have already accumulated. China, rebounding from the trade war problems that we had in that 2018, 2019 marketing year. And so we've seen a lot more Chinese imports of soybeans. And so that's what this chart's generally showing. The commitment of soybeans, and as I was talking about, we had a lot of outstanding sales in corn that hopefully those come through, but we need to watch that. Well, soybeans, it's somewhat the same story, but it's not nearly as bad. We've got a lot of those outstanding sales already dipping down to where it looks like we'll be meeting those levels, and there's not really as much concern about. We need to monitor those accumulated exports and make sure those ships get out and we actually deliver those bushels to the markets. Again, so the maps for point of origin and where it's going. Most of the PNW soybeans are going to China, the Gulf, going to different places, Europe and so forth because of the shipping advantages there. But generally, most of the PNW generally goes to the Asian areas and China in particular in the last few years. So that's something you can look at in more detail here to try to understand those trade flows, especially with what's happened in the markets. I'm just so the spring wheat reports here, but since I'm kind of running out of time, I'm not going to cover it too much. Again, you can kind of look on your own time at all these charts. There is some concern about wheat in some of the major foreign producers. Russia's been concerned about. There's concern that Russia might extend their export tax, so that would limit the amount of exports that they typically would do. Also, there's been rumors of Argentina trying to add an export tax to their wheat that would kind of make them non-competitive in the export market. And then ultimately, U.S. would pick up some of that wheat market in the world. And so that's been kind of bullish to wheat prices here immediately. And then also our wheat stocks to use is a little bit lower. It's still pretty bearish, but it's been a little bit lower than it has been in previous years. And so that's helped support wheat markets. I'm going to talk a little bit about our net income map. So this is just looking at net income. This is on the SD Extension website. And basically, it just takes the latest market information, our basis projections. And this is for corn. So if you want to change the crop, you just go here, press the control button, and then you can pick what district you want to be in, what crop you want. And this is for a South Dakota district. and then what future month you're looking at selling your grain for. Um, and then it also we have in here the costs, how much you put in here, and you can adjust these to what your input costs were. And we just have the standard enterprise budgets that SCSU puts out for these numbers, but and we don't have any rent in our numbers, but and then it figures, what is your expected income each day. So right now for corn, given the recent prices increases that we've seen since January, we've basically seen our net income for corn, and this is without rent, go from around, roughly where it was just about $50, $60 per acre back there in July when at one of the more bullish points, to now we're expected to see upwards of almost $400 an acre in net income in the last few market trading periods. Our yield estimates are based off of trend yields at the district level. So this is the East Central. So we're using a 178 bushel per acre expected yield. And you can adjust that yield level in the controls as well. And you can just see the futures price chart if you just want to look at the futures price. And then our basis chart for the East District. Here, basis was really strong coming out of the last marketing year, but then the COVID pandemic hit, so basis really weakened. Basis was getting stronger, and then we've had kind of a dip with these latest market increases. We've seen basis kind of weaken a little bit in East Central District. But our expected basis somewhere about minus 50 cents under the market. And then we have a risk in here. So we're, this $400, $300, $380 per acre net income we've seen in the last few trading periods indicated by this green is a lot higher than all the periods before where we were trading a lot lower net income. So real good opportunities to price old crop right now if you still have old crop. Probably recommend, to really look at that at this point in time. I think a lot of the positive fundamental information's probably priced in. I'm not, there could be additional positive fundamental information, but it'd be hard to, see where that's coming from. So I think there are a lot of good opportunities to price currently right now. And so that's one thing you can look at. So if you want to change and you want to look at, if you did the July contract instead and what July basis typically is in the county, and you can adjust basis expectations in our tool by just going down here and adjusting these bars. You can also adjust your yield levels, and then you can recalculate what your expected net income on a per acre basis is. So we have that, and then I'm getting the 2021 net incomes up. And so here we're looking at a December net income for December corn. I've done some adjustments to some of the cost levels. We haven't really adjusted our fertilizer price, even though fertilizer prices seem to be, or I think are going to be a lot higher than what they were. So that's something we probably need to look into and make those a little higher. But given December prices where they're at right now, and with an average trend yield in East Central, you're looking at about $250 per acre return for corn in the East Central districts. And that's without rent again. Now, if we wanted to think about that compared to soybeans, for example, we just change that to the soybeans, and it'll automatically change to the November contract for harvest. And given where we're trading somewhere right now for soybeans with an average yield of about 52 bushels an acre in the East Central District, given our cost levels that we have figured in here, we're looking at about a $282 per acre net return. So a little bit advantageous if we can get those trend yields, if everything's the same and their costs are correct in there, then there's a little bit more incentive to plant soybeans in the East Central District probably than corn, according to this analysis, but there's not a large spread there, about $20, $30 an acre difference. But if you change that's the wheat, there's a lot more spread. I think wheat's only about $50 to $80 for spring wheat, given our expected levels right now and what spring wheat yields have been in the East Central District of around 56 bushels an acre. So that's something that you can also play around with. We also have our basis tools and basis charts that's on the SD Extension website. So you can keep track of South Dakota basis in the different districts, and you can see what that difference is relative to those export market bids. And so the blue line indicates where we are right now. The blue ranges or blue shadings, kind of the ranges historically that we've seen in the East District. So we typically get a lot more ranges in that July period when stocks are real tight. You can see a lot more positive basis risk, but you can also see some negative basis risk as well. Basis doesn't typically fluctuate as much in these other months, during this period in January. But one thing to note is the differential here, especially as you're thinking about those transportation costs, as we talked about. This is also the cash bid report from USDA EMS that updates, so you can kind of see how basis or cash bids between the different states. If there's states that are crossing each other because there's stronger basis in a certain area or not, and that's on that basis app as well. So that's kind of the what I wanted to share with you today. And I know that's a lot of information. Probably need to kind of look at it and study it. But if you have questions, here's my contact information. You can email me at matthew.elliott@sdstate.edu. My phone number is here as well from my office. You can leave a voicemail if I don't answer. And then I'll get back to you. But would love to hear from you. If anybody's got questions currently, I'll take some questions or comments. And then if not, I know that's a lot to go over. If you need the links to see the links again for the different apps and the different grain reports that we're creating, then they're right here. But if you want me to send you the links, you can email me as well. I'll wait for any comments or questions. And you can put it in the chat. Oh, sorry. I see, Mike, I see you asked the question. Do you think that demand estimates have factored in potential changes from a new administration, possibly less refinery waivers, trade wars, or they're not significant enough to make a much difference? Mike, I think that's a really good question. I think that's something that, the market's kind of thinking about and looking at, and especially too, what is the, the phase one Chinese trade deal? How's that going to change? How's Biden going to, the Biden administration, how are they going to handle China? Are they going to be more confrontational, more appeasing? And I think there's just not enough evidence right now to indicate one way or the other at this point. The things I've seen is that they tend to not kind of address the Chinese trade war in the near term, and that's kind of more of a maybe later half of this year type of thing. So I think we're kind of probably sailing in kind of under the current status. Now, as for EPA and the waivers and the ethanol, I think that's interesting. I think you might see some more fireworks along those lines here in the near term. I think with the climate goals that the Biden administration has and climate legislation, I'm not seeing how that they're really interested in weakening the RFS standard. And so I think that I guess that's my personal view, is I think that the waiver thing from not only from the Supreme Court decision from last year, but the current climate, focus of the current administration. I think the RFS could actually be stronger. I would think that ethanol and renewable fuels would have a stronger voice with the Biden administration than maybe previously. So that would be my comment on that. But those are good things that we need to continue to watch. And the Trump administration had granted a couple waivers right there right before the new administration took over. So that was just a news item, but it was only for 2 refineries in Wyoming. And I don't know. I think there's so I don't I mean basically so there's a lot more of those waivers still standing out there that that we have to deal with and figure out do the refineries have to come into compliance for those previous years that basically those waivers have kind of been deemed to be was improperly granted. I think that could be a real big bullish thing for the corn market going forward. But I think it's just too much unknowns at this point to really judge. But yeah, you're right. I mean, that's going to be a major factor for the corn market here, still to kind of reveal itself over the next year. If there's any other questions, you can include them in the chat or unmute yourself and ask, and I'll wait a few more minutes. But Eric, I think you might have joined this. We're at the end, and it's being recorded, so I'll send we'll send you guys a link of the recording so you can watch the recording. Well, thank you guys for attending. And if you have any questions, my contact information is matthew.elliott@sdstate.edu. My phone number is here. And so I appreciate you attending and thanks for the questions. They were very good things to think about and for us to continue to monitor. I hope you guys have a good day.